Blog Talk
Welcome
Radio.
to the Food Pathogen Outbreak Recall Response Group and its Blog Talk Radio interview for today, Thursday, September 8th, 2011. My name is Andy Moreno, Vice President of Microbiological Systems Engineering at AME. Our topic today is the types of insurance to protect the interests of, hold on please, I think we have somebody here, and the types of insurance that are available for food producers to protect throughout the world, to protect them from potential liability issues relating to food pathogen outbreaks and recalls. This is a critical issue for many food producers nowadays, especially with E. coli, Salmonella, and Listeria outbreaks becoming more and more interesting to consumers worldwide and devastating to food producers. Today, our guest is Michael J. Lieberman from Capital Risk Concepts Limited out of White Plains, New York. And, Michael, I was wondering if I could have you introduce your company.
Sure. First of all, Andy, thanks for having me. I appreciate it. My company, Capital Risk, we are an insurance brokerage firm. We're based out of White Plains, New York. We've been specializing in the food industry for 35 years. We probably represent, I would say, hundreds of companies that are in the food business. We work with companies in multiple sectors of the food industry, from produce to seafood, meat, poultry, prepared foods. We're a full-lines insurance broker, meaning we handle all types of insurance. We've designed a number of insurance products that really broaden the scope of coverage and are specific to the food industry. Outside of insurance policies, we have developed programs where insurers are willing to provide credits to go towards risk management protocols. One example is setting up it's a credit that we've developed that helps our clients to set up fully functioning product recall plans in light of the Food Safety Modernization Act. I've been with Capital Risk Concepts now for almost 9 years. I love working in this industry, in the food industry that is. I come across so many wonderful and interesting people in this industry, and quite frankly, I love food. I love to cook food, eat food. I just love this industry very much, and of course, I love eating healthy foods.
Well, Michael, thank you for that great introduction. You know, as we were chatting earlier, you just came back from a wonderful holiday in Greece, eating their wonderful food. What are the best ways for fruit and vegetable business managers to evaluate their potential needs for insurance, especially in light of their income-producing goals?
Sure. I will say that my trip to Greece was fantastic. I highly recommend it. I know there is a crisis going on, but putting that aside, it was still a very enjoyable vacation with a lot of fantastic food. But getting to your question, Andy, I would say the best way for a business to evaluate their potential needs for insuring their income-producing goods is to really consider the entire supply chain. You have to consider it from farm to fork. The supply chain really presents a variety of risks that are diverse and hard to control. The first step in the process is risk identification. And then each risk should really be quantified and a judgment made whether or not the company can financially accept that individual risk. Each risk should be looked at from both a frequency and a severity perspective, and a decision then needs to be made to either self-insure, partially insure, or fully insure that risk. In my opinion, when a risk is easily self-insured, there's really no need to waste any premium dollars on that exposure. You should really put that money towards other risks that could have more of a substantial impact on the bottom line.
Wonderful. You know, Michael, what you're outlining is really important. So that if our company, for example, were to choose to insure some of our supply chain risks, what kind of insurance is available?
Well, there's multiple types of insurance that are available. It's just a matter of piecing together the appropriate policies. There's no single product or even package of products that respond directly to fruit and vegetable supply chain risks, for instance. But there may be a number of individual policies that, when cobbled together, a company can use those policies to address nearly all the risks that one chooses to either partially or fully insure. This process of putting individual policies together is a bit like building a wall of protection. Each individual policy is like a brick within that wall.
That's a wonderful analogy, building a wall to protect a business. Some of these businesses have been in food-producing business, been in their family for generations. So how does a company protect their supply chain wall? Brick by brick.
Or how does a company build their wall? It really all depends on the unique needs of a business. There's no set protocol. The nature of the fruit and vegetable supply chain has really changed on a worldwide basis. Today, most fruit and vegetable businesses range from companies solely dedicated to importation of fruits and vegetables, while others are worldwide, multifaceted farmers, processors, importers, and exporters all in one. Also, a company needs to look at the shipping methods, packaging methods, and the specific product characteristics need to be part of that equation. To begin building the process, you really need to select a competent coverage designer, an insurance broker or agent with the expertise and the experience in dealing with your products as they move throughout the supply chain. It's important to choose an insurance specialist that really understands your industry. They need to know what questions to ask in order to get all the information that is needed to build an effective insurance product. The coverage designer examines the entire spectrum of needs and selects not only the policy forms, or the bricks in this analogy, but also the risk management practices to build that wall. The coverage designer or the agent broker works within a budget and tries to purchase the appropriate bricks at the best price. Usually the bricks need some or a lot of modification to meet the intended needs of the particular company. Does that make sense?
Yeah, I mean, when you're talking about these bricks, I think it would be a little helpful if you could outline what types of insurance policies would be important to build a supply chain wall of protection.
Sure, I can do that for you. We would need a lot more time to really go into a lot of detail. Quite frankly, I know most people can only devote a limited amount of time to insurance because it's not the most interesting topic, but we'll try to make it interesting for today. But I'll outline a few of the policies that are used to build this wall of protection. One policy is the marine cargo policy. When I say marine cargo insurance, a lot of people think just about ocean transport. That's not the case. We're talking about ocean transport, air transport, truck transit transport. This policy ensures all of a company's transportation and storage risks, from the farm to your buyer, in one comprehensive, seamless policy. Another policy that's one of the bricks in the wall is product contamination and product recall insurance. This ensures the value of your goods due to a contamination event, including your loss of gross profits. From an example of a loss of gross profit is a contamination event that leads to a company losing a major customer. So losing that account and the income that you would lose from losing that account due to a contamination event. It also covers the recall cost and the rehabilitation costs for not only the product, but also the brand name, the company name in the marketplace. There's a lot of PR efforts that go into that, and this policy can cover those. Then there's another policy or brick in the wall is product liability. This ensures liability for bodily injury and property damage due to your product or the sale of your product. There's also trade disruption insurance, yet another brick in the wall. This is relatively new. Coverage was specifically designed to protect businesses against disruptions to the supply chain, even when there isn't